Welcome back to the cryptowrld channel, everyone. My name is Josh, and in recent hours, the markets have had an extremely positive reaction to the recent Federal Reserve meeting. And in just a moment, I'll be explaining exactly what that means, why it was bullish for markets, and why right now we're starting to see the light at the end of the tunnel in terms of the downtrends, the major recession that we're currently seeing. All of that and so much more later in this video, so make sure you watch to the end. First of all, we need to talk about what the Federal Reserve just did, and what they did was increase their federal funds rate, so increase interest rates, by 75 basis points or 0.75%. And as of right now, the US federal funds rate has risen all the way up to 2.5%, also known as 250 basis points. And as you can see down here, both consensus and the trading economics forecast were predicting a 2.5% federal funds rate after today's Fed meeting, which is exactly what we now have. So the majority in the market were already expecting a 75 basis point hike, but some were even expecting a potential 100 basis point hike. As I covered in my last video looking at what the futures market was pricing in, roughly around a quarter of the futures market was pricing in a potential 100 basis point hike, which would have been the bearish scenario. Because in case you're new to this channel, basically the higher these interest rates go, the more bearish that is for markets. And once again, before today's Fed meeting, the futures market was pricing in a probability of around 25% for a 100 basis point hike in the federal funds rate, which means increasing it by 1 full percentage point. But at the same time, the futures market was pricing in a 75 basis point hike at a 75% probability. So the majority of the market, once again, was already pricing in a 75 basis point hike, which essentially means in that case, all of that money that has already priced that in doesn't really do anything. It's already priced it in. It already knows that's going to happen. But because there was still a decent chunk of the market pricing in a potential 100 basis point hike, because of the fact that we didn't see that full 100 basis points and we only got just the 75 basis points, a lot of the people who might have been expecting a 100 basis point hike have now gotten something that is actually more bullish than a 100 basis point hike, because remember, in this case, at a 75 basis point hike, obviously interest rates aren't going as high as a 100 basis point hike. So all of those people who were pricing in a 100 basis point hike, once again, had to quickly react to the Federal Reserve only hiking rates by another 75 basis points. So that was one of the main catalysts for today's Bitcoin pump. But around 30 minutes after these official numbers got released, we continue to see markets pump. Talking about the stock market and the crypto market, for example, they kept pumping for pretty much the next hour or so, and one of the main reasons behind that was to do with what Jerome Powell, the chair of the Federal Reserve, said in his press conference. And obviously he said quite a lot of things in that press conference, but one of the main things he mentioned was this right here. He said it likely will be appropriate to slow pace of increases as rates get more restrictive. And that right there is pretty much exactly what I explained in detail in yesterday's video before the entire Fed meeting even happened. And if you're new to this channel, you might be wondering how exactly I was able to talk about pretty much exactly this happening before the Fed meeting even happened. And no, unfortunately, I cannot read Jerome Powell's mind, but what I did do was look at what the futures market was pricing in. And if you simply take a look at all of this probability data based on what the futures market is currently pricing in, we can see the most likely outcomes for the interest rate hikes at the next Fed meetings. And usually the Federal Reserve hikes rates in line with what the majority in the market are expecting in order to avoid a massive shock in the market. And so once again, the majority of the market going into today's Fed meeting was a 75 basis point hike, and we did end up seeing a 75 basis point hike as expected. But now looking at the next Fed meeting, which isn't until September, so we don't actually have a Fed meeting next month, but the next Fed meeting once again is in September, and the market, the futures market, is currently pricing in either another 75 basis point hike at a 35% probability, or the most likely outcome for the next Fed meeting in around 2 months from now is actually just a 50 basis point hike, coming in at a 65% probability of a 50 basis point hike at the next Fed meeting in September. And now obviously between now and then, these probabilities can actually change depending on other factors involved, like inflation. Obviously between now and then we will have more inflation data get released. But as of right now, the majority in the futures market are currently pricing in just a 50 basis point hike at the next Fed meeting, and then the Fed meeting after that, which takes place in November, the majority are pricing in just a 25 basis point hike for the November Fed meeting, and then the next Fed meeting after that is in December, and the majority for that Fed meeting are pricing in another 25 basis point hike in December. And then at that point right there, in December this year, if you're going off what the majority in the market are currently pricing in, it's at the December Fed meeting where we could actually see the last interest rate hike before they begin to actually stop hiking rates and potentially start lowering rates again next year, towards the middle of next year. And once again, I talked about all of this in much more detail in my last video that I posted yesterday in advance. And basically what Jerome Powell said in the press conference today pretty much confirmed what the market is already pricing in, which is actually a good sign, because believe it or not, but if this continues to play out as it has been doing, then with this very Fed meeting, this is actually the pivot point where the Fed goes from higher and higher rate hikes. Obviously, earlier in this year, the Fed began raising interest rates by just 25 basis points. And then in the following Fed meeting, we saw a 50 basis point hike, and then we saw a 75 basis point hike, and now another 75 basis point hike. So throughout this year so far, at each of these Fed meetings, the Federal Reserve has increased the amount that they're hiking interest rates by. But now with today's Fed meeting, we have potentially now reached a point where the Federal Reserve will begin slowing down their rate hikes. So there will still be some rate hikes to come. Like I was saying, the majority in the market are currently pricing in another 50 basis point hike at the next Fed meeting, and then 2 more 25 basis point hikes. So potentially another 100 basis point increase between now and the end of this year. But obviously a 50 basis point hike and 25 basis point hikes are smaller than the recent 75 basis point hikes that we have seen over the past 2 Fed meetings. So due to that, due to the fact that we did not see a 100 basis point hike today, and due to the fact that the majority in the market are now only pricing in 50 basis point hikes and 25 basis point hikes leading to the end of this year, we are now at that pivot point where the Fed is beginning to pivot. They're beginning to potentially slow down their interest rate hikes, even though they're still hiking. They're most likely not going to hike at the same rate as they have been doing the past 2 Fed meetings. And this pivot by the Fed is a bullish pivot point. And it is very important to understand just how big of a deal the Fed pivot actually is for markets. And in order to easily find out how important a bullish Fed pivot is for markets, we can take a look at the previous federal funds rate over the past few years. And what we can see here, throughout 2016 all the way up towards around the end of 2018, the Federal Reserve was hiking their federal funds rates. But then right at the end of 2018, just before 2019 started, the Federal Reserve stopped hiking interest rates and basically held rates at the same level. And the moment they stopped hiking interest rates at the end of 2018, looking at what happened in markets, first of all, this is the Nasdaq 100 index on the daily time frame. This right here is 2018, and at the end of 2018, we bottomed out after quite a significant crash. In fact, this was technically a bear market, according to the stock market definition for a bear market, which is a decline of 20% or more. So once again, the last cycle where the Federal Reserve was hiking interest rates, we saw a bear market in the stock market, and then as soon as they stopped hiking interest rates, that bear market bottomed out at the end of 2018 for the stock market. And looking at the Bitcoin price, once again, at the end of 2018, the Bitcoin price bottomed out for its 2018 bear market alongside the stock market. So it was at that pivot point, the moment where the Fed stopped hiking interest rates, they slowed down their hikes. It was at that point right there where markets, the stock market and the crypto market, both bottomed out. And then in early 2019, both the stock market and the Bitcoin price had a significant rally. But between now and the end of 2018, there was another pivot point in the market where we saw the Federal Reserve go from a plateau in their federal funds rate to a major drop off in the federal funds rate all the way down to just 25 basis points. That right there happened during March 2020. And if you're looking at that time in the market, that was this time right here. This chart, by the way, is the Nasdaq 100 index on the daily time frame. And obviously the stock market was crashing quite a lot in early 2020. And then we saw that major Fed pivot point where the Fed dropped their federal funds rate by quite a lot spot in early 2020. And from that moment on, the stock market bottomed out and began a massive rally later in the year. And looking at the Bitcoin price during that same time period, this was March 2020. Obviously, we saw a major crash in the Bitcoin price alongside the stock market. And during March 2020, we saw a significant Bitcoin bottom just below $4,000 per Bitcoin at that Fed pivot point when the Fed dropped their interest rate all the way down to 25 basis points. And from that moment on, the Bitcoin price pumped all the way from around $4,000 up to above $60,000 early the following year. So in case you somehow don't already know by now, the Federal Reserve is clearly a big deal when it comes to markets. They are one of the most powerful players when it comes to market, talking about the stock market, crypto, and even real estate. And so the fact that we are now seeing early signs of a potential Fed pivot point in terms of the rate hikes for the federal funds rate, this is massive news. It is extremely bullish for markets, especially over the slightly longer term, and especially after we see the Fed stop hiking rates potentially towards the end of this year or early next year. So basically, if you think markets haven't bottomed already and they're due to make another low, it is extremely likely that between now and around the end of this year, that market will most likely fully bottom out and potentially begin the next bull market entering into 2023. But anyway, now getting into the Bitcoin part of this video, this right here is the daily Bitcoin chart. And as we can see, the daily Bitcoin RSI is still in a relatively strong uptrend, forming higher lows and higher highs, which is once again a bullish signal for Bitcoin, as I have been saying for many weeks now. And obviously, it is a great sign to see the Bitcoin price back above $22,000 per Bitcoin. Hopefully, we can now continue to hold above 22K, because as you can see right here, over the past 1 to 2 months, $22,000 per Bitcoin was significant resistance for the Bitcoin price until we recently broke above it. And so technically speaking, it is a bearish sign if the price drops below 22K, which is actually what happened over the past couple of days. But obviously with the really bullish Fed meeting today, that was obviously far more important for markets than the Bitcoin price giving us this short-term bearish signal below 22K. And even though the price of Bitcoin did not make its way down towards around 19,000, we did run into some short-term support on the 4-hour Bitcoin chart, which was this golden pocket, the most important Fibonacci level, and that was coming into play at around 20,700, which is pretty much exactly where we saw a bounce in Bitcoin, as I spoke about in yesterday's video once again. And something else that I was also talking about in yesterday's video was the fact that the 4-hour Bitcoin RSI briefly entered into oversold territories, which technically means we have limited room to the downside in the short term. And technically speaking, that is a bullish signal for the Bitcoin price, but I also mentioned in yesterday's video that in order to have even more confidence in a potential bullish reversal beginning, then technically we need to see some higher lows and higher highs start forming in the 4-hour Bitcoin RSI and potentially a bullish cross in the 4-hour Bitcoin MACD. And just before we saw this massive green candle post-Fed meeting, we did actually see those bullish confirmation signals. We saw a couple higher lows and higher highs in the 4-hour Bitcoin RSI after we entered into oversold territories. And also the candle before the massive green candle, just one 4-hour candle before that one, we saw a bullish cross in the 4-hour Bitcoin MACD, giving us extra bullish confirmation in the short term. And then after we saw those bullish confirmation signals in these technical indicators, we also saw this pump in the Bitcoin price. And obviously since then, the Bitcoin price has broken back above the 5-day simple moving average, which is this yellow line right here, and that is coming into play at around 21,900. So due to all of those signals on the 4-hour Bitcoin chart, obviously the Bitcoin price is currently more bullish than bearish when it comes to the short-term trend for the Bitcoin price just on the 4-hour time frame. But with that being said, it is important to keep an eye on the 4-hour Bitcoin RSI, which is currently getting close to overbought territories. And the last couple of times we reached overbought territories, we were due for a little bit of a short-term cool-off. So just keep that in mind. The room to the upside in the immediate short term, talking about the next few hours or so, might be somewhat limited. And when it comes to potential levels of resistance in the short term for Bitcoin, I'll be looking towards this golden pocket level of resistance when you draw the Fibonacci retracement tool from the local high to the local low. And by the way, right now at the time of recording this video, the Bitcoin price is currently testing this golden pocket, which is coming into play at just underneath $23,000 per Bitcoin. And if the Bitcoin price can confirm a break above 23,000, then my next short-term price target for Bitcoin in that scenario would be towards this local high, which is sitting just above 24K. And now heading into the Ethereum part of this video, this right here is the daily Ethereum chart. And obviously we still have that strong resistance at around 1700, but you can see that recently Ethereum too was affected by that bullish Fed meeting. Pretty much all markets were affected. And obviously when it comes to the daily Ethereum RSI, this has not changed in recent weeks. We can see that at the time of recording this video, the daily Ethereum RSI is still obviously in an uptrend, forming higher lows and higher highs. And during a time like this in the market, this is more bullish than bearish for the price of Ethereum. And this, by the way, is even a leading indicator, because even before we saw that significant pump a couple weeks ago, this daily Ethereum RSI was already trending to the upside, as I spoke about back then on the channel. But with that being said, we have to be on the cautious side here, because we're potentially forming a bearish divergence in the daily Ethereum RSI between the RSI and the price action, of course. Because if you're looking at the Ethereum price action, we're potentially about to make slightly higher highs in the daily candle closes, whereas if you're looking at the daily Ethereum RSI, this is recently forming slightly lower highs. And by the way, when I earlier said that the daily Ethereum RSI was in an uptrend, forming higher highs and higher lows, in terms of these more defined highs in the Ethereum RSI, then yes, we're still forming higher highs. But if you're looking at the immediate short term, at more of these shorter term fluctuations in the RSI, then technically speaking, just more recently, we're forming slightly lower highs in the daily Ethereum RSI, while the price action is potentially making slightly higher highs. And the last time we saw something like this happen in the price of Ethereum was right around here at the beginning of April. So that's just something to keep in mind moving forward. And obviously it would be even better seeing the price of Ethereum actually break above 1700, because in that case, that would likely make a new higher high in the daily RSI. And obviously breaking above significant resistance is a bullish signal. But it's just while we're below that resistance, still be on the somewhat cautious side until we actually see a confirmed breakout here. And if you zoom into the shorter term, taking a look at the 4-hour Ethereum chart, we're seeing somewhat similar signals right here. Obviously, after seeing a perfect bounce from this exact 38.2% Fibonacci level coming into play at around 1360, we've seen a lot of short-term bullish price action from that level of support, which I also talked about in my last video. But right now, the short-term level of resistance to pay attention to here is coming in at around 1650, but more importantly, once again, that $1,700 level. But if you're looking at the Ethereum price oscillators, more specifically the 4-hour Ethereum RSI and the 4-hour Ethereum MACD, technically speaking, they are both pointing in the bullish direction as of right now at the time of recording this video. And so technically speaking, the short-term trend for Ethereum is more bullish than bearish as of right now. But once again, we are currently running into heavy resistance. And the 4-hour Ethereum RSI, like the 4-hour Bitcoin RSI, is getting close to overbought territories. It's not there just yet, which means technically we do have some room to the upside, but the room to the upside in the immediate short term is somewhat limited for both Bitcoin and Ethereum. And if you want to maximize your profits in crypto, make sure to check out one of these uploads popping up right here on your screen. The video in the top left shows you how to make money if the price is either going up or down, and the video in the bottom left shows you how to make money if we're seeing choppy sideways price action. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.